Good morning, traders. Welcome to Tuesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump in, we always need to check the news so that we know what's going on and, more importantly, when it's going on. So looking at the news calendar, like we talked about in the weekly brief, there's not a ton of news this week. The only big news is on Wednesday. So since today's Tuesday, that doesn't really help a whole lot. But looking at what's going on for the calendar, we do have the IEA monthly reports that are going on this morning. At 8:30, we have the export price indexes for November and the import price indexes, as well as a New York Empire State Manufacturing Index that's forecasted at 6.9. Those can move the markets around, assuming that there's nothing else. So 8:30 might be a little bit interesting. At 9:15, we have the industrial production month over month for November. Forecast is 0.3%. And then we go into the afternoon session at 1600 with the tick net long-term transactions. And then at 1630, today's Tuesday, so crude oil, API, weekly oil stocks. We'll see how those come out. But the previous was 1.141 million, and that'll give us a clue as to what to expect for tomorrow's inventories. But that's about it. There's not really a whole lot of news or anything else going on. So from that perspective, now I can jump into some charts. So today, 12/15 of 2020. Now we can rock and roll. First up on the list is going to be the NASDAQ. And with the overall NASDAQ move, obviously it had that gigantic jump back on the 9th that just got obliterated. But after that fall lower, sellers just aren't able to really continue it farther down. They just keep hitting their face against the walls. And, well, after that last time around when they failed another higher low, seems like they gave up. So now with this rotation back up with an upside gap from the weekend, we're finding balance above that, which it still hasn't closed. And now that it's had a strong rally, a deep pullback, and buyers continue to defend those pullbacks, still not allowing that gap to fill, that means that sellers are potentially getting squeezed. There are a few caveats to this, of course. We've got some rising continued support, maybe creating a channel. Right, if we take this across the highs and then we pop this down in the lows, that might give us something to work with in the future. But for right now, that's about all we have to work with, is just kind of finding it in a balance with maybe a midline. Currently, it's in the middle of the upper half and just kind of hanging out. Certainly not a great place to be looking for any types of trades. Got to wait for it to be getting into a zone of interest. Right now, that zone of interest is a little bit lower, around 422 quarter, or a little bit further up at around 611 quarter. Where it sits right now, it's just smack in the middle. Tough to do anything here. And then we've got the S&P. Now, the S&P did pull back and they did fill the weekend gap. So that objective from the S&P standpoint is done, which is a great sign for bullishness and continuation, which is sort of what we're seeing across the board on the indexes. But from the S&P standpoint, you can see a very, very strong rotation after a monstrous trap on the lows. Trap sellers in, continuing to squeeze. And now we're getting this really, really nice little pennant formation for another potential breakout up. Everything is lining up for continuation back to the upside. We cycled off the lows of the range. Now we can go back to the highs of the range. And then from there, they can make a decision. But as of right now, we're hovering in the middle. And, well, I mean, buyers were the most recent ones to come off. So that's going to be the one with the most bias. But if it does want to pull back a little bit, there might be a level of rising support to play along with to try to get maybe a couple more entries. But the way that it's looking right now looks really, really like a big blow off into a pennant and then a continuation rally back up again. Then over to the gold side of things, where it's getting a pretty strong rotation off the bottom, but with gold, it's gone a lot further, right? It rolled all the way back up to the highs of the falling channel resistance, or wedge top resistance, or however you want to look at this area. But it hasn't really reached out to grab like 54.2 or R3 or any of those other zones of interest. So the big thing really is seeing, hey, did they just find another big zone of balance where it was a huge trap underneath the lows? Because if that's the case, then we've got this falling resistance, which is already broken with a pullback, right? We've got a falling resistance here, a little narrower, which is broken, doesn't have a pullback, and now we're challenging another falling resistance. There's a lot of structures that the bears were relying on that are breaking down, and with all of those breaking down, that next pullback is definitely going to be a zone of interest for buyers to come in, looking for that rotation back up. The caveat, of course, is that it does kind of look like a left shoulder head, right shoulder formation, and it's attempting to get a break of that neckline, which hasn't necessarily happened yet. But man, if it tries one more time, I doubt buyers are going to really stand in the way. So the next time it pulls back, buyers got to show up to the party and looking for them to hold. And if they fail, man, then it's just a wide open door. There's not really much to hold price until it starts getting down into the 1790s, which is way down there. Over on crude oil, seeing the wedge continue to kind of persist here. We had that gigantic rotation yesterday with a big pop to a new high and then a huge flush down. That flush made it all the way back to the 46s, dipped into the 46s just a little bit, and honestly looks more like a retest of that previous start, that big bull leg to the upside. Buyers just reabsorbed it and shot the market back higher with a V bottom. So with that higher low in a transitional phase, we've got a little bit more resistance ahead, which does look really good. We've got R1 falling resistance, structural resistance. There's a lot of stuff there. But if the buyers are able to break through that, then there's not really much left standing in the way. If the buyers fail, then looking for a deeper rotation down where support comes more into play around the 46s, maybe with a shallow trap a little bit further up around 46.50. But the big zone is going to be down at those 46s for a kind of a secondary bounce, I guess. Secondary? Third? Fourth? However many bounces it's gotten now. Just looking to buy it cheaper. It's way too far up, too near resistance to want to be a buyer up here. It's got to pull back. On the euro, we can see some nice ascending wedge formation, which attempted to break out of the highs yesterday. Didn't really work, rolled back over, and that created the bottom. So with the bottom being formed there, we can mark this up a couple different ways. We can look at it from a shallower low perspective, coming across like that. We could also start from the middle point and say that that's the wedge. It's also holding there. Now, with that in mind, we could also go across here and say that falling resistance is broken. There's a lot of different ways to mark up the euro. So whenever there's a situation like that where there's a potential lot of confusion, I like zooming way out and seeing what's going on from the big picture. From the big picture, we have a falling level of resistance. That was that kind of channel descending wedge-ish that failed to break out lower, held the inside pullback. Now we broke higher, breakout pullback. Now we're trying to get that next leg to the upside. So it makes a lot of sense to see that extra bit of confirmation move to the upside, new highs, looking for, 1.222, that big kind of psychological objective up there. Seeming like, man, it would be very nice to see them reach out and grab. And realistically, the way that the bigger picture is looking, it just looks like it's really ready to at least get some job done. And that job, it looks like it's waiting to go through the highs. And then finally over on Bitcoin, where we've got a pretty cyclical range once again. Not a huge surprise. But the one thing that is standing out pretty nicely is how aggressively we had this flush earlier this morning, right? We dropped from the 19,450s all the way down to the tick, S1 down there at 19,050. We also have the big 19,000s. So a big giant flush. And then after that big flush, all of a sudden, higher low, bull reversal. Like, wait a minute. If this move down was so aggressive, where are the sellers? And also notice, while the market was coming down very aggressively, we saw big pushes in volume, which would suggest that buyers were buying the pullback. Everything is lining up really nicely for a potential continuation back to the upside. It's just a matter of seeing whether or not they want to show up to the party here, where it is, which would be a little bit more aggressive, right? Breakout, pullback, continuation. Or if this wants to get a trapped low, right? Break below the inside swing, but not below the major swing, and then rotate all the way back up from there. Either way, the bulls are interested. It's just a matter of which pullback they want to try to stick the landing on. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let those winners run. If you have any questions, feel free to shoot me an email, jhb@ssftg.com. Otherwise, enjoy the rest of the day. Have a fantastic trading day, and we will see you all tomorrow. Thanks.